In a nutshell, what we expect in 2024 would be as follows. Indian macro is looking extremely strong. I think it's going to be an oasis as global growth slows down. The China Plus One theme, which is working for us, is going to continue working for us. The capex growth is going to be very high, and that is going to support the consumption theme as well as the pro-India macro theme that we have been seeing for some time now. One major event obviously is going to be the election that is coming up later this year. As of now, the entire expectation and the consensus is that the ruling government will continue to do so and come back to power. If there is any surprise on that front, it's going to be one major impact for not only the economic policies, but also the overall market movement post that. US is going to be more interesting, to be honest, as compared to Indian macro story. We are all seeing whether US is going to do a soft landing. When will US Fed cut happen is the most important part for global economics, because that is going to have impact on India as well. What we think is that US will not see a major hard landing in 2024, barring any geopolitical or a black swan event that could happen, the chances of which seems very low as of now. So from an interest rate perspective, what we are seeing is stable interest rates both in US and India, which essentially means also stable interest rates in the form of bond yields, stable dollar rupee. We are expecting rupee to net remain positive because of the global flows we will get. The inclusion of Indian government bonds in the JP Morgan Emerging Market Index will help some flows coming in. So overall, rates and rupee seems to be very steady. Because of all this backdrop, also because of very strong corporate earnings, we are expecting that equity market rally will continue. There will be sector rotation that we have to be very careful about. Also a market cap rotation. So what we probably see is a 2024 where large cap makes a large comeback, which means the outperformance of mid cap to small cap could be probably not even close to what we saw last year. So a lot of money has to be in the large cap for this year is what we would think. If you were to position yourself for 2024 and beyond, I think these are three things that you should do at this point. One, all of this macro and Indian story impacts to you only through your actual investments. And your investment plan should always be a function of your financial plan. So if you have not got it done till now, this is a very good opportunity of getting your financial plan prepared from an expert. Get a clarity of where your finances are, get a clarity of where you should invest, get a clarity of what is the right asset allocation for you. Don't go by what your neighbor is doing. Don't go by what the TV experts are saying, because they're all giving you generic information. What is relevant is what is specific to you and your lifestyle. Get a financial plan done that will tell you where you should invest, what is the rate of return that you should expect, and then create a portfolio for that. Number two actionable should be, if you haven't done it till now, weed out every underperforming scheme and stock from your portfolio. We are at all-time highs in markets. If a stock or a scheme is still not doing well, there are fundamental reasons for that. You don't have to be an expert to know it. It's already giving you signals that they're not performing well. This is a good opportunity to book losses, to cut out stocks and schemes that are not in your top performing ones. Reinvest that money in the top performing ones, because they're clearly giving you signs that they're doing well. Be it schemes, be it stocks, this action is going to help you a lot going forward. And the third thing that you probably want to do in 2024 is try and preserve the gains that you have got in the last rally. If you have been investing since the COVID crash, I am assuming that your portfolio returns from equity is probably in the range of anywhere between 15 to 25% compounded. It's not a very normal rate of return to expect from equity. Maybe you want to consider hedging some of those gains in ensuring that you will not have losses if the market corrects. Have a wonderful 2024 and a great investing journey.